In this episode, I, Jenny Rae, have an interview session with Mike Ford, an advanced degree candidate who's interested in going to Bain. We did the case Bain-Style, and we ran it for the standard amount of time, which would have been about 30 minutes. Afterwards, I provided detailed feedback where we looked at Mike's notes and had some insights about how he could specifically do better. Overall, it was a great performance with a lot of engagement from the audience, and we're excited to share it with you. Awesome, Mike. Great to meet you. Excited to walk through this case with you today. Before we dive in, I just want to let you know that I'll take a look at your notes afterwards and I'll give you some feedback. Do you have any questions before we get started?
No, I believe I'm ready.
Amazing.
Let's go.
Let's do it. So the title of this case is a company called Needle Meter. And so let me walk through the case with you. Our client, a company called Needle Meter, manufactures and sells blood draw needles to laboratories at a price of $2 per needle. Their primary market is in the United States. They are the leading firm in this 200 million unit sales industry with 70% market share. There's only one other competitor. Federal healthcare regulations will decrease the industry size by 5% next year because they are mandating a decrease in frequency of blood draws for chronic patients. Our client, however, is interested in maintaining its profit to fund other projects. What options does our client have? And specifically, are any of these options appealing? Do you have any questions about the background?
Let me just make sure I understood that correctly. It seems that our client manufactures needles and sells 70% of the needles in the 200 million unit market. They're selling them at $2 a needle. There's only a single competitor. However, we are seeing a shrinking market through healthcare regulation. We're seeing a 5% decrease in the next year. And what we would like to do is to maintain our profit. And then we will think about how to do so. I do have a couple of questions. The first one is on some more on the healthcare regulation. Are we expecting anything else beyond the first year, or can we time this to this 1 year period?
At this point, we don't have any further information about it. So you draw whatever conclusions you think are important to develop a robust strategy.
All right, that seems good. And then I have another question about distribution and marketing. How do we market our product to these labs?
Awesome. So I don't have a ton of information about it right now, but usually the way that these products work is that we have direct relationships with larger organizations, and then we use distributorships for smaller organizations. So with only two players in the market, we probably have a dual prong strategy.
All right, that seems good. And then just sort of a basic level question on the competitor. Are they strong? Are they able to take this hit, or will it be a tooth and nail fight to absorb this 5% decrease?
I'd be curious about your thoughts about what would make them strong and able to take the hit.
Sure. I would say that if they are particularly cost competitive compared to our product, then they would be able to, let's say, cut prices in a way that we will not be able to do as far, and thereby they can take the decrease while we cannot, while maintaining profitability.
Good. Anything else?
Perhaps if they are also focusing on large buyers, if they can maintain their relationships or extend their relationship with these large buyers, that will push us out. So that might be something to focus on our side. I'm just going to make a quick mark of that.
Okay, sounds good. I don't have any data for you now, but those might be worthwhile things to explore inside the case.
Well, would you give me a moment while I structure my thinking around this?
Absolutely. Go for it.
Thank you. All right, Jenny Rae, I have a rough structure here. I'll hold it up very clumsily to the screen. You can sort of see what I'm doing over here, but I'll talk you through
Wonderful.
it. I think
sounds good.
Clearer. The place that I would like to start is our internal profit. Then I would like to look at this one competitor that we have. And finally, from there, I would like us to look at some strategies that we can use to go forward. On our internal profit side, I would like to look at revenue and costs, and within that, on the revenue side, the price, we said that it's $2, but we can look at some flexibility in that price. On the volume, we know that there's a market drop of 5%, but perhaps we can see how that might play out, either like by customer segment. You said that there are large buyers and small buyers, so there could be a difference in the volume change there, or perhaps by geography, if that is a more sensible way of going about it. Over to the cost side, I would like to look at fixed costs as well as variable costs. And I'm imagining fixed costs there being rent, labor, any regulatory fees. It sounds like we have these factories that we have to keep up and so on. And then on the variable side, I imagine that it's predominantly production and then distribution. Over to the competitor, as I mentioned, I would like to look at the cost-based that they have to see how well they would be able to enter a price war. And then secondly, to look at their customer relations. Perhaps they have some weak customers that we can enter, and then we start, that might be a strategy. Then over to our strategies, I have them blocked in a revenue strategy and cost strategies. Under revenue, pricing strategies. So do we increase prices to make up for this loss and maintain profit? Or do we try to boost volume through these various methods and keep the price the same and push the decrease in volume off our competitor? And then the other option is that we will be facing let's say we have to take the 5% hit on revenue due to the decrease in volume. We could cut costs by a similar amount, and that would lead us to maintaining profitability, but having lower revenue and lower costs nonetheless. So can we start at the company revenues? And I think that would give me a good idea of how it is that we go about selling these needles. So let's start with price flexibility.
Mike, before that, can I just ask you, what do you think their primary lever is that they're going to pull here to respond?
I'm torn between pricing and cost cutting.
Okay.
So, and that'll emerge as we see where the most efficient things are. With pricing, I do imagine that there might be regulatory concerns with that. So, if I had to make an hypothesis right now, cost cutting might be the best way to go.
Okay. All right, sounds good. So you said you wanted to look at revenue first. What in particular did you want to look at? Mm-hmm.
Yes, the first thing that I would like to look at is price flexibility, whether we can increase the price and what the fallout would be from that.
Okay, great. Well, tell me first what you think the fallout could be.
The first one is a drop in demand, that if we increase the price and our competitors sell a similar product at a lower price, everybody will simply swarm to them. The other, as I mentioned, would be regulation. If the healthcare regulation prevents us from selling at more than $2 a needle, then we simply can't do it. Yes. Okay.
So you're only interested in raising price, not cutting price, eh?
Mm-hmm. Not at this point. I can see how that would benefit. If we lower the price, we can capture more market share. But since the pie is shrinking, that wouldn't be my first instinct going forward.
Okay. Well, our client has a different instinct, and it'll be your job to advise them on whether that's a good one or not. Our client is interested in actually considering cutting prices and, in fact, trying to take share from the competitor in the process. So our total cost for the client is $1.20 per needle. Our competitor outsources manufacturing for a total cost of $1.40 per needle. So what I want you to figure out is what the client's current profit is, and should the client lower its price to engage in a price war and drive the other competitor out of business, at least partially or totally.
We'll be right back after this quick break.
Have you ever heard a new digital trend and thought to yourself, okay, does this really matter? Asking the right questions helps you cut through the noise and get down to what matters most. I'm Jim Hertzfeld, host of the What If, So What podcast, where we discover what's possible with digital and figure out how to make it real by asking what if, so what, and most importantly, Now what? Subscribe and listen, and together we can turn big ideas into tangible actions so you can get shit done.
Okay, that seems good. I just have a quick question. You said that they outsource the manufacture of the needles. What do they do in-house?
The competitor? I don't know, but I just know that they outsource the manufacturing, probably sales, distribution, etc. But I don't know.
Okay, all right, that seems good. All right, give me a moment, and then I can work out the revenue. I'll actually let me talk you through it instead.
Okay.
All right, so we have $2 per needle, and then we have 2 million needles. 200 million needles per year, of which we have 70%. However, I can take a little shortcut here. I can cut the revenue. I can just make or subtract the cost from that, and then I can say that we make 80 cents per needle, which I will then multiply by the total market and the market share. So we have 80 cents times 200 million is 160 million, of which we capture 70%, which is, give me a moment on that. $112 million. Does that seem about in the right ballpark?
Seems right to me.
Okay, excellent. So that is where we are at in profit. That is quite robust, considering that this is all that we're doing. Then if we want to maintain this, I would like to look at the price or the price flexibility. How much more market share will we capture if we decrease prices?
So, what do you think? What do we want?
One way to go about it is to capture or to obliterate the competitor by lowering our prices to their cost. That would be one strategy, and then we capture the entire market, but we only make the difference between their price and our price, which is 20 cents per dollar, but at 100% of the market share. I can go ahead and calculate that to see if that's
Let's do it.
Okay, excellent. So if we lower our price to $1.40, that means we make 20 cents per sale, but we capture 100% of the market. So that would mean that we make $20 million per year. Now that is a lot less than the profit we have been making.
Just walk me through that methodology one more time.
All right, I'm taking the cost that we'll be lowering it to $1.40 per needle, the price. Then the cost is still $1.20, and now we're making profit of 20 cents on per sale. And we multiply that by the full market, which is 200 million, not 100 million, which I used. And that leaves us
with 200 million now?
The full market is still 200 million, isn't it?
It is, but where is it going?
Oh, it's going down. It's going down. All right. So it's going 5% down. Of course, that's the problem right there. All right, I can just take that off the profit as well. So 5% of the 40 million is 2 million off. So that leaves us with 38 million that we have left at the end of this.
Okay.
That is considerably less than our current profit. It's about a third of what we have at the moment. So I do not imagine that our client will be pleased with that. I would like to consider next if we can squeeze the market in some way. Maybe there's an efficient way of riding on the supply-demand curve that we don't cut the price that much, that we can still make a profit, but still capture market share from our competitor.
Okay. Now, but before we go into more data, I have a question for you.
Sure.
The competitor has another division, and the other division comprises 75% of the competitor's revenues.
Okay.
The other division manufactures a specialty chemical that is sold to laboratories to analyze urine samples. So just as a very low-tech illustrative example, it's a powder that changes color when used in drug testing or high glucose levels, et cetera.
Okay.
So that division is very highly dependent on the laboratory relationships that are built through the needle business.
I see.
How does that change what our strategy and the future might look like for the industry?
What I would expect from the competitor is to perhaps lower their price below profitability in order to maintain the relationship with the labs so that they can continue fueling the chemicals business. So something to look at there would be how profitable is the specialty chemicals, the urine testing materials, to see how much of a hit can they take on, or how much of a loss do they want to take to continue selling these chemicals, to continue having these relationships.
Okay, absolutely. Anything else that you'd want to think about?
I imagine they'll be fighting tooth and nail not to lose that 75% of their business alongside the 25% that we're squeezing. There is, however, an opportunity for us that perhaps if we move into that market, then we can use our 100% market share to get these chemicals to more labs. So perhaps we could consider an acquisition of this company, wholesale. So we take their needles, and then we use the chemical business as well. An alternative would be to have some sort of partnership that they can use our needle relationships to sell their chemicals.
Okay. Now, you said that you wanted to go back to some other tactics. What were some of the other tactics that we could look at as well?
All right. Another option would be cost-based. So we said that the cost per needle is $1.20. If we can cut that by 5% as well, we can keep our revenue as is and take the 5% hit on volume and still have the same profitability.
Okay.
So do we have options on cutting costs in any way?
Just tell me how we do it.
Sure. I would like to look at, firstly, let's look at variable costs first. And it's also important to point out that since we will be selling less, the variable costs will drop. So let's start with variable costs.
Okay.
How much does it cost, or what are the components of this cost? Does it?
What do you think?
Sure. I would imagine that a lot of the $1.20 is production and manufacturing, as opposed to overhead. But I would like to know the breakdown of that, and then in the variable costs, something like the price of the raw materials. If we're making needles, they're probably specialized steel. That sounds like an expensive part of the process. I'm not sure about what the labor costs associated with that would be, or the distribution. But perhaps we can start with the production costs and the various inputs for that, and see if there's a way to lower those in some useful way that would help us maintain profitability.
Wonderful. And I have no data for you. So you have to tell me what in particular you would look at for this.
Sure. So as I mentioned, I think that the steel price is a relative factor. So perhaps we can look at where the commodities markets are going, or if we have sufficient buyer power, we could squeeze our suppliers to acquire the raw materials at a lower price.
What do you think about that potential?
I think that's pretty good, although steel suppliers also they supply a lot more steel to auto manufacturers than they do to needle manufacturers. So perhaps that's not as useful. But if we do increase our market share, and it does seem that we do use a lot of steel. So I would see that is a possibility, but I also don't imagine that will bring us down the full 5% of the cost to absorb the hit on the revenue.
I think so too. Also, I'm just not sure that with the size of a needle, that the amount of steel that we'll utilize will be significant enough.
Okay. That seems fine. Then some other variable costs. Is it expensive to distribute these? We have good partnerships, so I imagine that distribution goes fairly rapidly, or is it optimized already, or can we streamline the distribution process as well?
Okay. Yeah, what do you think?
5%. Yeah, that is a big cut. That does seem to be a bit of a stretch.
Mike, let me ask you this question.
Yes.
From data that we do have,
Yes.
how much cost do we have to cut to keep our profit the same if we maintain share of the market in the new world?
That it would be a little more than 5%.
Can you calculate it for me?
I can. Sure. So I'm going to first calculate the newly imagined revenue, which is just 5%. Sorry, the newly imagined profit, which is 5% less than it was. So the current state is on the 80 cents times 70% of the market. We make $112 million a year, and I'm subtracting 5% from that.
We don't necessarily have to take the 5% of the profit. That's all right.
Right. Yeah, we're looking at the revenue instead. So hold on. So the profit was, I have the profit already. I can just go ahead and do the revenue in the new setting. So the minus 5%, sorry. And that's, so I have the dollar price, the $2 times the 190, that's 5% less of the current market, times the 70% market share. And if you'll give me a moment to calculate that.
For sure.
All right. It seems that our new profit will be 260, sorry, I apologize. Our new revenue would be 266 million. And I'm going to run through the same calculation with the cost, the 190 million needles times 70% times 1.0. Actually,
remember what we're calculating here is to keep our profit the same.
Yeah. All right. So I'm going to restructure this the algebraic formula.
Yeah.
So what we're looking for is profit is we have that the revenue minus the cost, and then the cost is the volume times price. Volume times unit cost. So we have the profit at 112 million, and the revenue we just calculated at 266, and then the volume I had just had at hold on, the volume is 190 million times 70%, and that leaves us with 133 million needles. Okay, I can now restructure the formula so I can subtract the profit from the revenue, and that leaves us with 154 million in costs that we can absorb, and at 133 times the price, I can now divide the 154 million by the volume, which is 133 million.
Okay.
This is getting
a little interesting, huh?
A little interesting, I would say. Yes. All right. Give me a moment to do this brief calculation. How exact would you like this to be?
Oh, perfect. Of course. No, it's okay. Give me a ballpark. Here's what I'm looking for, Mike. I'm interested in knowing how much we're talking about cutting auto costs.
Okay. All right. It doesn't seem to be that much cost that we need to cut. So I have $1.2133, which is, I would say, around maybe. So
that's more than our current cost. Does that make sense?
Is it more than our current cost? No, it's just under our current cost. It's about $1.16.
Oh, there you go. Okay.
Yeah. Yeah. So $1.16, does that seem that really is just a tiny cut in our cost. I feel that we should be able to find 4 cents per needle somewhere. So that's about 3% of the cost that we need to cut.
Okay, so then ultimately, if it's only 4 cents, just going back to the big picture now,
Right.
and I'll just ask you one more time where you think you would go first in the cost structure in order to find that 4 cents.
All right. The one that we haven't spoke about is the fixed cost. If we can cut some overhead costs, that might be with a change this low, we might even be able to do some financial engineering to get over that hump. But yes, let's take a look at the fixed costs. Are there some excesses there that we can trim down on?
Okay, I don't have any more data for you, but just wanted to see your recommendation. Okay, and so the aggregate total of the fixed cost that we have to cut is what?
So what I'm using the cost of 120 times the total market times 70%, and that gives 1 million and 68. So we have to cut 168 million minus 154 million, which is it's 14 million in costs that we have to cut. Again, this seems very much within the realm of the possible. We can look at fixed costs. I imagine labor costs being quite a lot here. Maybe over the years we've seen some bloat on the SG&A side. Yeah, that seems to be the salaries of a few executives that we can cut. Who am I pitching this to at the end?
Great. Well, at this point, we've run out of time, so I want to ask you to just give us a summary of what you would recommend and anything else that you'd recommend us do if we had more time.
Sure. Please give me a moment just to organize my thoughts.
No, just dive right in.
Oh, really? All right.
Oh, yeah.
So, right. I would recommend finding some ways to cut our fixed costs. We need to absorb about $14 million in costs in order to maintain our profitability of $112 million per year. It does not look like pricing strategies would be as effective as cost-based strategies, since our competitor is priced relatively close to us. I would like us to, in terms of next steps, think about what the competitive response would be if they would change their cost structure as well to perhaps capture some more market share. And the very next step on our part would be to look at ways to cut fixed costs.
Wonderful. Okay, Mike, you can relax. Congratulations. That was 29 minutes and 57 seconds. So you did a great job from the beginning. All right. So before I move to any questions, I want to provide some feedback for you. I like you, and that makes a big difference in the case. And I hope that everyone could see that as you were going through it. You have a very upbeat, earnest approach to everything. And your desire to ground it in actual information was very clear throughout the case. So in a first round situation, I would have passed you because I like you and I think that you could do the job. And ultimately that, we can't ever lose sight of that as the big picture. However, when we're coaching people, we coach you to the second round because that's where the decision comes in and where you either get the money and the job or you don't. And so what I want to do now is just walk you through some of my insights and some of my feedback.
Sure.
And in order to do that, I'm actually going to share my screen. And I'm going to share the scoring chart that I used, and we'll provide a link to this afterwards so that everyone can see it. And so you did something dangerous, and I'll give you kind of the weak spots first, and then we'll talk about your strengths afterwards, because I really think that interviews like this are meant to identify weak areas that then you go back and drill in order to put them back together in the bigger context of the case. And if you run cases all the time, especially with people that are nicer than I am, then you're probably at risk of maybe missing out on some of that. So can you see my screen, Mike?
I can.
Okay, great. So what you should be able to see here is that I have this is our method 2. We have 3 scoring methods. This is our content scoring. And we have an expert coach. This is the kind that they'll do because they're not just looking for whether you fit it within the time or kind of checked the box on the core things that should have been there, but they're also looking for the quality of your content. And so I gave you some lower scores on a couple of key areas. The creative questions is the first one that I want to go to. Because I asked you creative questions that you maybe didn't identify as creative questions, but I noticed that you weren't taking notes during them. You were giving me some ideas, but not necessarily listed or segmented ideas. And they ended really quickly. And you would have avoided me doing the second math problem had you been more robust in your creative questions. So there's actually a dual strategy. First of all, demonstrate you can do them more thoroughly. Second of all, make sure that you protect yourself from the horrible math beast that could come out if you finish other pieces of the case too quickly. And so there were a couple of questions that I did ask, right? Hey, what do you think about this? Or like you asked me a question at the beginning and I pushed back on your third clarifying question and I was kind of diving into some of those things. But in those situations, if I were to give you feedback to say that you were unstructured, that would have been my core problem area that I would have said you seemed unstructured. And I think a little slow down in your pace, writing actively what you're thinking during those creative portions, and then being super detailed about exactly why you think what you think. So going into the second level of everything. I also feel like kind of in the same vein, in your case and objective clarification questions, you asked me 3. They were decent questions, but I dinged you on that because I felt like you didn't give me your own ideas about what should happen or what you were looking for. So you were kind of asking these very open-ended questions that I felt like you could have kind of answered yourself, right? Should we look further on to the future? Of course. Like, otherwise I'm going to have to come back and pay you again. What kind of distribution should we have? I mean, you don't know and I don't know, but tell me what you think it might be. I pushed back on the third one, right? Like you said, how big is our competitor or how strong is our competitor? Can they weather this? You're kind of asking for new data there, but you're trying to cheat a little bit. But, we know that they're smaller than us. In this segment at least. And so tell me what you would be looking for there in terms of new information. But I kind of felt like you were on the third one in particular, just stretching for information and kind of chatting through it without being really pointed in why you wanted the information, which is a danger issue for me. The other thing that I just wanted to talk about was your structure, because overall I liked it, but there were a couple of points of feedback that I had. Your first core bucket of your structure was the whole profitability tree. That's cheating. You can't do that because that, and especially BCG will give you feedback. They'll say, no, that's not a MECE structure. You put profitability plus anything else, it's no longer MECE. So I think there were a couple of areas inside there that you could have included and you could have even layered some of your other pieces into. But I did not feel like you went sufficiently into the second level of detail in the core areas like price and quantity, which were, quantity was going to get affected. So could we sell more? Probably not. You could have even just eliminated that from the beginning. And then talked with me about pricing, which was one of your key hypotheses, and gone deeper into what we could have done there. And then cost reduction, and then maybe competitors on the outside. In addition, you could have layered competitors under pricing. And just, one hint is that if you put internal profit, when you're looking at that, you could just call it something different. So instead of pricing, like say pricing, but then say operations, and then use all the cost things under operations. But maybe, don't lay out that pricing structure. And again, this is all second round. I told you I'd pass you in the first round. That structure was a vanilla-ish first round structure. I wanted something more for second round. So go back and rewrite that after this call. Then let me point out some of the things I thought you did really well. I liked you at the start of the case. You were eager, excited, enthusiastic. Your recap was strong. I think you could have gone a little deeper into the context of the recap that you were adding in, but overall, you got everything. You seemed like you were super with it. In your grand pause, you took 2 minutes and 20 seconds, just a little over the 2 minutes, but it felt natural and it felt like you did something with that time. So when you came out with your game plan, it wasn't like you just been sitting there for 2.5 minutes. And again, I felt like you attacked it. I liked the vigor that you went after that with. So I feel like there's a little growth there. I gave you a 3 on the math. I don't know if you felt shaky about that. I gave you a 3 because I think your notes were messy. And you did a really good job at the beginning. Your first math problem was your best one. That was the one where you're, where everything felt like it was beautiful and life was simple, right? You started without giving me a recap, then you recapped it. You started diving into the numbers and you took a step back and you walked through the structure. Then you did a shortcut for the math by just diving right into the final piece, which became a nemesis for you later when I asked you to tie everything back, but that's okay. That's okay. You still got there and your math was solid. You didn't make a math error. You only made structure errors in your math in that you didn't necessarily use the right things to get to the answer that I needed you to do, but there were like fundamentally solving errors. So I felt comfortable with your ability to do this job mathematically, and I didn't feel a hindrance for that. But as you saw in the second math question, we went to over 7 minutes to answer it, and that was largely reflective of, I think, note-taking and a lack of structure, and not being, maybe not in your notes accommodating for what would happen later with math. So not kind of keeping that section with a little bit of space to be able to go back and refer to it. Can you show us your notes there actually really quickly?
Sure. Good luck.
That's what I expected.
I sort of know what's going on ish. Yeah.
Amazing. Okay, great. Well, and then, I felt like your case closing was strong, and I know you felt like you just wanted to take a deep breath, but you did a good job diving in, practice diving in. Partners don't have any attention span for that kind of nonsense, the whole structure yourself at the end. We're done. We're almost done here. Let's just finish it off. So I thought that when I corrected you on that, you went for it. You put all 3 elements that were there. The next steps, you did make a recommendation, and you included a little bit of your methodology. It could have been a little longer. You probably had another 30 seconds to give me more of the methodology you'd gone through in the case. And it's sometimes a good way to message to people, like, even though my notes were messy and my process was messy, I do know what I was doing, and I'm able to recap it at the end.
All right.
So I just want to congratulate you for doing a really good job and also giving us some material. Thankfully, it wasn't perfect. You gave us some material to talk about in terms of coaching. So now I want to ask you first if you have any questions before I open it up to the floor.
I just want to thank you for firstly the case and then also the feedback. As you mentioned, I think that my math thinking was a little all over the place, and that is reflected in my raving scrawlings.
Mike, just to correct that, Mike, afterwards, go rewrite it.
Okay.
And then next time, give yourself, your notebook is a little small. Give yourself a little more space, just, printer paper or something. And our general recommendation is put 2 pieces of paper out in front of you as you're beginning the case. So you can see the whole thing and just have a little more real estate to work with.
Yeah, that would be useful. I had a quick question about the structure part. You mentioned that it's not quite messy. On which side does it transgress, on the me or the C side? On
the me, because you're doing profit and then levers for profit. So the 2 of them together, basically, like when you add anything to profit, the firms are kind of like, ooh, all of a sudden we're doing something twice that we should be doing once. And so that's why usually I wouldn't recommend in a second level or a second round case that you include part of the profit structure in there. It'd be better to have other pieces there.
All right, that makes sense. Yeah, I'm looking at my structure now, and there are 3 times the word cost appears in 3 different categories. So not me.
In general, the me is a more of a concern in the first place because collectively exhaustive in 30 minutes is limiting. Yeah. So the me makes more sense. And then I also just felt like at the end, I pushed you on what you thought would be the most important things. I just encourage you when you're building your structures to take a second at the end, renumber them, and then prioritize what the core areas are.
All right. Excellent.
I just want to talk really quickly about the content of the case as a final step, if that's all right with you. This was a really kind of interesting case because we did have the price war. You were able to identify super quickly that the profits would go down if we price. You did recommend an increase in price, which I didn't have any data on, so we kind of couldn't talk about that, which is why we went down the cost piece. when you see the case later, you'll notice that whole second math exercise was not included in the case. I did that spontaneously with you. Which in general, yeah, I'm sure you're so grateful, right? In general is a sign of trust in the interviewee when you think like, hey, let's riff a little bit and see what would happen here. And that is where I really felt like you needed just to give yourself a little more breathing room. Maybe at one point, take a step back and kind of reorganize your notes a little bit. And then, but then the one thing that I felt like from a content perspective is that you kept coming up with ideas, but that they remained unprioritized. So here are all the costs versus like, this is the cost that I think could get us there fastest. And that in the final round is going to matter a lot because every partner has managed the male or female, the human on their team that has been like, let's go look at 10 things. And they're like, no, like I do want to go home and I don't want to do this all night. So let's go look at one. Which one do you want to look at? So just that moment consistently a couple times happened in the case. And in this situation, like I mentioned with the steel, right? You went after steel, you went after materials. That's a normal pattern that a candidate would go after. But here we're talking about just a little itty bitty bit of steel. So, so what is that amount of steel times 200? Probably not even as much as a couple of cars, right? So we're probably not looking at the tactics that you were going after. So that's why I recentered you on, let's figure out the amount of costs that we need to save and then let's go on. Anyhow, final questions from you.
I am satisfied. Thank you.
You're terrified to say anything else. I'm sorry that you couldn't see me. I was smiling throughout the case. But overall, I really did think that you did a good job. Thanks for listening to this episode with Mike Ford, the Bain-Style case interview walkthrough. For more interview walkthroughs and for more great content, please subscribe to our podcast. In addition, if you've got questions about this case, you can check out our case bank at managementconsulted.com or join our Black Belt program, which is our advanced interview preparation process for case interviews. In addition, if you have more great ideas for future guests on the podcast, please reach out to us, team@managementconsulted.com. Thanks again for listening.